Hello everyone, welcome to the Trendline Investor channel. So this week's video, we're going to look at two stocks from the coffee space. Now, coffee space as a sector has been doing well since the last couple of years. We've seen some good rallies after the COVID crash. But what has happened in the last 1 year is the sector itself and the stocks also have gone sideways and they have not given much returns in the last 1 year since last June, July 2021. So that's what we're going to focus on today. But before that, there's been a lot of noise around the Dow crashing after the Fed's statement that happened on Friday. So I'm also going to give you a quick walkthrough as to what I'm looking at the charts and what I feel the markets will do in the coming days. Okay, so let's jump into the Nifty Outlook first and let's see what Nifty has in store for us. So here I have the chart of Nifty Outlook, and I also discussed this similar chart last week, and I said we are probably going to do a time correction and probably go sideways. We did have a couple of days of correction and then we saw a green gap down and we kind of had a very strong green candle. But the last 3 days in the last week before we ended the week actually has been pretty good, right? So we went sideways even though the Western markets did correct a bit, we did not really correct much. Right, so that shows that actually there's been strong buying. In fact, even the broader market has been performing well in the last week. A lot of stocks were performing well. Even the stocks I posted in the last couple of weeks have performed well and we're doing well as well. Right, so overall for me, I think the bearishness is not that strong yet since the breakout that we had and since the rally that we've had. I feel this is just a normal correction, and this correction might take Nifty towards the levels of 70,000, 17,200 or 70,000 levels. The worst case, I see that we might head towards this support zone over here, which is around 16,000, 16,400, 600 levels. And we shouldn't really go beyond this zone, which is here. Because remember, this is the first breakout and this is going to be the first retest. And also we have this channel support here. So looking at the past experience, at least what I've seen in charts, I feel that we should take resistance support around the channel support, or we take resist support around the horizontal breakout zone over here. Now that's my perspective, and I do feel that we will not touch again the lows that we saw back in July or June, and we should consolidate around the zone between 16,600 levels and 17,000, and then eventually we probably head higher or at least consolidate and do time correction. The worst case, we might probably hit the lows again, probably in the next couple of months, not immediately in the next week or so, but in the next couple of months, we might hit probably that lows of 15,200 levels. But I do not really see markets going beyond that, below that levels. So that's my take. Do let me know what you think about Nifty and where do you think Nifty might head in the comment section. And I'm happy as always to discuss with you. Okay. So coming to the stocks that I want to discuss today, both stocks are from the coffee space, as I mentioned. And the first stock we're going to look at is CCL Products or Continental Coffee. Now, Continental Coffee is a fantastic company, especially given that it's in the coffee space. This is one company which has grown steadily over the years. It has given really strong PAT numbers over the years. And I feel this stock is just about to start the next leg up, and we might see some really good returns in the coming months or in the coming years. Right, so let's take a quick look at the fundamentals as always. So screener in is what I use. And here, if you see, the market cap is around 6,300 crores. So kind of a mid-cap company, which is trading at a P of around 30, whereas ROC is around 15.6 and ROE is around 17. So pretty good numbers there, both from ROE and ROE perspective. And promoters hold a 46% stake in the company. We had seen a significant sales growth of 28.9% in the last year, and also a very good profit growth of 13.7%. But this company, as I said, is in the production, trading, and distribution of coffee. Now, there are some things I want to really talk about this company specifically. I did some reading on the after looking at the con call report, and here before that, what I want to also mention is this company is basically a leading global coffee manufacturer in 90 plus countries, and it has 89% of its sales is it constitutes the export business, right? And it's the world's largest private label manufacturer with capacity of 35,000 metric tons. Now keep that in mind, 35,000 metric tons, because we're going to shortly take a look at that in the con call that I read. I'll share some insights from there as well. Right, it has plants in India, Vietnam, and also it has some capacity in Switzerland. So overall, for me, this is a very good company. Apparently, supplying to 90 plus countries means it's really huge, and it has very strong name in the coffee space itself, right? But in this quarterly results, there was a con call which happened after the quarterly results, and I did read some very interesting insights. Now, one of the interesting insights I want to really, let you know is this one. So the company has capacity of 30 to 35,000 capacity in the last 4 to 5 years. But if you see from 2020 onwards, we are now seeing increasing the capacity to more than 70,000 tons. Now that's a question which was actually posed or posted to the management. The question is, so it is like doubling up capacity after a period of wherein we can expand it capacity. So what is giving us the confidence of increasing such a large step up, increasing capacity, right? So basically the question is, what is giving the company the confidence to increase the capacity to almost double its capacity in the coming years, right? And this is the management's answer. So they are saying they actually see the confidence is coming from 3 to 4 fronts, which means there are 3 to 4 different aspects. One is that constantly the domestic market has been growing in a very steady pace. So there has been a very strong domestic growth. And 3 to 4 years, if you see, we have started to see growth in the domestic market, right? And we're not very sure in what direction the growth will go and what kind of capacities will require. But now we are confident that we have achieved a certain turnover, we have achieved a certain volume, and this volume is expected to grow by 30 to 40% in the next 3 to 4 years. And that's the primary reason why this company is increasing its capacity. And that has given the company a lot of confidence that they will be able to, or we will be requiring these kind of enhanced capacity in the future. And as we're growing, what is happening is that the ability to offer or be competitive in the international market also is becoming very, very strong. And that is helping us gain new business. So all of them put together, we are very confident that we'll be requiring these kind of capacities going forward. And they are seeing actually the volume growth, right? I'm not talking about the net price effect and the price growth and the revenue growth. I'm talking about the volume growth. So previously, if they were selling, let's say, X amount of coffee, now they will be selling probably X plus 20% or something like that, right? And that's the guidance for the full year as well. So they're expecting approximately 25% to 20 to 25% volume growth, and there will be approximately 10 to 15% upside on the price. Remember, coffee prices are doing well as well, which means that there will be overall close to 40% value growth. Now that's why I'm discussing this company today, and it also came in my CC scanner. So let's take a look at also the shareholding pattern here. Now, if you look at the shareholding pattern, so even the FIs have reduced the stake, the DIs have lapped onto the shares. As I always say, if DIs or FIs are buying shares, which means supply is reducing the market. And if you see right now DIs hold a 22% market share, company's share, whereas public share has gone down from 27% to 25%, right? So that's a very good sign that the DIs have bought all the stake that has been sold by FIs and also some stake from the public as well. So looking at the annual numbers here, so if you see back in 2019 March, there was around 1,000 crore sales is what the company was doing, and today they're doing a 1,600 crore mark, or 1,400 crore mark in last year. Right now, that's excellent growth in the overall sales. So that's almost a 60% growth in just 3 years, right? And if you see the margins have kind of remained stable around 23% mark, and it's pretty good. I mean, they are not really seeing a major fluctuation in the margins. So I feel that given the price appreciation of coffee also, I think we might see some really good profit margins going forward. Overall, PAT has hit a new all-time high of 200 crores, and that's pretty good numbers. And from a component CAGR perspective, the company has been growing its sales by 11% last 3 years and 10% profit growth in the last 3 years. So that's my fundamental take on CCL products. Do let me know what do you think, because I'm sure a lot of you have looked at this company because it's a fantastic company, and do let me know what do you think and if you are on the same lines as me as well. Okay, so that's the fundamental. Let's look at the technicals now. From a technical perspective, I covered this stock back in somewhere around I think October 2021, somewhere around those levels when I saw that wick and the price was going up. But now what's happened is we are trending in this long-term channel, right? We have reversed already multiple times from this channel. And now we have consolidated for 1 year, almost 1 year of consolidation, and now we are about to break out. Now remember this volume this month, we saw a slide in volumes down, and now the volumes again picking up, which shows that this stock might eventually break out this month or probably next month. But we're almost close to the breakout, 1 year consolidation, rectangle consolidation, and we might break out and head higher. Remember, we had a breakout somewhere in 2021, and this is just a consolidation. So still the stock has not done much. We are still hovering around that 2017 levels, and given the capacity increase and given the price increase, I see a lot of potential for this stock going forward. Okay, so let's take a look at the daily chart just to find where you have to buy and where we can actually keep a stop loss. So in daily charts, we are seeing a short-term uptrend again. So there was a strong downtrend, but now since that breakout there, we saw increase in volumes. We are having a strong uptrend, and now we are, again we had a short consolidation with amazing green candles. We had amazing breakout. For me overall, I would buy the stock at current market price, keep a stop loss somewhere around those levels and, ride the trend as much as possible. So yeah, buy at current market price 478, keep a stop loss of 400, which is around, 16.3% stop loss or 78 points. I'm looking for targets of 750 or even 1000 in the next 3 to 5 years. Now, you could take this as an investment candidate and ride the trend, just buy 5% of portfolio and keep it. Or you could do also positional trading and, ride the trend as much as possible and gain, with a strong position size. So we're looking at a risk reward of around 3.5 to 6 to 7 times the risk that we're taking, and that's how I would trade the stock or invest in the stock. Okay. So again, do let me know what you think in the comments. So this week I posted a video on 5 exit strategies of how you can actually trail your stop loss, especially if you're doing trend following. And they are really 5 good strategies. It might help you book profits in a timely manner, and also might help you ride trends, long-term trends in stocks. Okay, so do let me know what you think on this, and let's take a look at the second stock. So the second stock is Tata Coffee, and Tata Coffee also, is in the same business as CCL products, but Tata Coffee is not it's not really expanding capacity, or it is not really just like how CCL product is. CCL product has a much bigger coverage across countries. Tata Coffee has its own specialty as well. So let's take a look at Tata Coffee's. Tata Coffee here actually has a market cap of 4,400 crores. It's in the small cap space. Anything greater than 5,000 crores is mid cap. So this is in the small cap space. So probably it will move into the mid cap space soon. We're looking at ROC of 13 and 9. So as I said, this is not as good as CCL products, but definitely a good company to invest in. So here, P is around 26.5, and we are seeing a sales growth of 13% and a profit growth of 30% profit growth. The profit growth has been better than CCL products. So definitely, at least the last 1 year, it has done better than CCL products. So this company also is involved in production of, trading and distribution of coffee, tea, and allied products. So unlike CCL products, this company is also involved in pepper selling, tea selling, and a lot of other businesses as well. And this company is Asia's largest integrated coffee company, and the second largest exporter of instant coffee, and the foremost producer of specialty coffee in India. It also has a pepper business. It was also one of the leading producers of pepper. So geographically, this company also has 57% of the revenues come from USA, followed by 15% in India, and some of the other countries as well, right? So looking at the shareholding pattern, so unlike CCL products here, FIs have bought shares recently, but a very minor stake. Majority of stakes are held by promoters and public, right? So that's a pretty less shareholding compared to what FIs and DIs hold in CCL products. But however, looking at the the overall revenue, again here since 2019, we've seen a similar growth that we saw in Tata Coffee, right? So in CCL products. And even here, the margins have gone up. It hit a rock bottom around 13%. Now we're again seeing a rise in margins. The margins are pretty high in CCL products, and that's why probably it also commands a higher PE, and also it has a higher ROC and ROE. Remember that. And also here we are seeing very good profits after taxes, and we've hit all-time high here as well. So overall, the sales growth has been around 9% for the last 3 years, and profit growth has been around 34% in the last 3 years. So we've gone from 80 crores to almost 164 crores in Tata Coffee. Okay, so that's the fundamentals. Let's take a look at technicals and see what the charts are telling us. So similar to CCL products, here also we had a 1-year strong consolidation. We had a breakout here as well. So overall, the coffee space itself is doing well, and that's why both the companies are doing well. So we could see similar kind of returns in both the stocks, but my bet would still be on CCL products rather than Tata Coffee. But yeah, even equal allocation to both would make sense. And here again, we saw some strong volumes. In fact, we've never seen such volumes since 2013. So we're seeing some really good volumes, and 1-year consolidation we're breaking out here as well. So for me, the stock also looks technically excellent, and we are looking at a long-term uptrend which has resumed after this breakout here. Okay. Looking at the short-term trend, again, we had a strong major resistance here around the 230 levels. We had a breakout on Wednesday, and we've taken out the major resistance, and we are seeing some good volumes coming in as well. So overall, for me, this also is excellent. Just similar to CCL products, and I invest at current market price, which is around 237, 238 levels. Keep a stop loss around 11%. So from a risk perspective, the risk is less here than in CCL products, but yeah, the target is here around 310 or 400 levels, which gives us a risk reward or ratio of 2.7 or around 6 if we consider a target of 400 levels. But as always, I say, ride the trend as much as possible, or just invest 5% portfolio and let the stock do its magic, and do not interrupt the stock while it's moving up. Okay, so that's the two stocks I want to discuss. But before that, before I leave you, I also want to discuss on about HDFC AMC and HDFC Life recently posted, and both have been doing well. So if you've not checked this video, do check it out. I'll leave you here, but don't forget to subscribe to my channel and don't forget to like this video. Take care, stay safe, and trade safe. I'll see you in another video. Bye bye.